Why $20,000 is the most important milestone, not 1 million. Think about this for a second. You open your banking app, and instead of feeling stressed, instead of doing quick mental math, instead of wondering whether you can really afford lunch, gas, or that next bill, you smile. That moment matters more than most people realize, because most financial advice online keeps pushing the same fantasy number, $1 million, 6 figures, make it, get rich, escape the rat race. And sure, those numbers sound great, but for most normal people, especially if you're starting from zero, those goals feel so far away that they don't change how you live today. They don't change how you sleep tonight. They don't change how you handle an emergency next month. They don't change how much pressure you feel walking into work on Monday morning. But there is a number that does, and that number is $20,000. If you're starting from zero, $20,000 is the invisible barrier. It's the threshold where the rules of the game begin to change. It's the point where life stops feeling like one long emergency and starts feeling like something you can actually control. It's the difference between being a passenger in your life and finally putting your hands on the steering wheel. Building wealth is a lot like pushing a massive boulder uphill. At the beginning, everything feels heavy. You're working hard, you're sacrificing, you're saying no to things you want, and somehow it still feels like you're barely moving. That is the phase where most people give up. Not because they're lazy, not because they're stupid, but because the beginning is brutally psychological. When you have no savings, your brain stays stuck in survival mode. Every decision feels urgent. You take the bad job because you can't afford to wait for a better one. You stay in situations you hate because leaving feels too risky. You delay big goals because the present keeps demanding all of your attention. And that's what people who already have money often forget. It is very hard to plan for your future when your present feels unstable. It's like trying to plan a dream vacation while your kitchen is on fire. You are not focused on possibility, you are focused on damage control. That is why the first layer of savings matters so much. Because money does not just buy things, it buys breathing room. It buys time to think. It buys emotional stability. And once you start building that cushion, something shifts inside you. You stop asking, how do I survive this month? And you start asking, how do I build something better? That is a completely different mindset, and it changes everything. Now let's talk about the math, because this is where things get exciting. Imagine you're saving $1,000 a month. That first $20,000 may take you a long time. It may take discipline. It may take sacrifice. It may take turning down restaurants, delaying purchases, driving an older car, and living below your means when nobody around you understands why. That first stretch feels slow because you are doing almost all the work yourself. But once you reach 20,000, the game begins to change, because now, for the first time, your money starts helping you. Even if the returns are not huge at first, the principle matters. You are no longer building alone. Your savings begin to generate their own momentum. And that means the next milestone can come faster than the first one did. That is the magic of a real financial foundation. At the beginning, every dollar has to come from your labor. Later, some of those dollars start coming from your assets. That is when wealth building stops being pure effort and starts becoming a system. And once that happens, progress feels different. It feels lighter. Not easy, but lighter. And that psychological difference matters just as much as the financial one. Because when people say the first 100,000 is the hardest, what they really mean is this. The hardest part is getting to the point where your money finally starts doing something for you. And for most people, the first life-changing version of that is not 100,000, it is 20,000. But the biggest change is not just what happens in your account, it's what happens in your posture. Your confidence changes, your career changes, your decisions change. When you live paycheck to paycheck, you are negotiating from weakness. If your boss is terrible, you tolerate more than you should. If your workplace is draining you, you stay longer than you want. If an unexpected expense shows up, it feels like a crisis instead of an inconvenience. That is what financial fragility does. It makes everything feel more expensive, including your dignity.
But $20,000 creates what I call walking away money. Not retirement money, not luxury money, not quit your job forever money. Walking away money. It gives you the power to say no. No to the toxic boss, no to the bad deal, no to the desperate decision, no to an opportunity that looks urgent but is actually wrong for you. That kind of power is hard to measure on a spreadsheet, but you feel it immediately. You ask for the raise you deserve with a different tone in your voice. You go into interviews with less fear. You stop treating every car repair, medical bill, or rent increase like a full-scale disaster. And maybe most importantly, you become capable of seeing opportunity, because opportunities usually do not arrive when your life is calm and perfectly organized. They show up when you least expect them. A business idea, a move to a better city, a course that could level up your skills, an investment opportunity, a short window to make a smart decision. People often think wealthy people are just luckier. Sometimes they are, but many times they simply have enough cash on hand to say yes when something good appears, and that matters. Because being broke doesn't just limit your purchases, it limits your options. And $20,000 starts giving those options back to you. Once you hit this milestone, another shift happens. You stop obsessing over every tiny money decision, and that's a good thing, because a lot of people waste enormous mental energy on small purchases while ignoring the decisions that actually shape your financial future. They stress about a $3 coffee while signing up for a $700 monthly car payment. They compare grocery brands for 10 minutes while overpaying for housing, debt, insurance, or lifestyle upgrades that quietly drain them for years. The biggest wealth decisions are usually not about tiny habits. They're about major recurring commitments. What you drive, where you live, what debt you take on, how much fixed overhead you lock into your life. And one of the biggest traps of all is the car payment treadmill. A lot of people normalize spending hundreds of dollars every month on a car that keeps losing value, month after month, year after year. And because it feels normal, it doesn't feel dangerous. But it is. Because that money is not just leaving your account, it's also losing the chance to grow. That's the part most people miss. A $30,000 car is never just $30,000. It's the payment, it's the interest, it's the insurance, it's the depreciation, and it's the future wealth that money could have built if it had stayed invested instead. Once you have real savings, you start seeing money differently. You stop asking, can I afford the monthly payment? And you start asking, what is this decision costing my future? That's a much smarter question. And once you start thinking that way, driving a reliable older car no longer feels embarrassing. It feels strategic. It feels self-respect. It feels like choosing freedom over appearances. Now here's the warning. When you finally hit that first $20,000, don't blow it. Don't treat it like permission to suddenly upgrade your whole life. Don't convince yourself that you deserve to spend the seed just because you worked hard to grow it. You did work hard, you absolutely did, but that $20,000 is not the finish line, it's the seed, and seeds are not meant to be consumed, they are meant to be planted. Because if you protect that first $20,000 and keep building on top of it, it becomes something much bigger than a number. It becomes stability, it becomes leverage, it becomes optionality, it becomes the beginning of real wealth. But if you spend it too early, you're not just losing money, you're sending yourself back to the bottom of the hill to push that boulder all over again. And anyone who has ever had to restart knows how painful that feels. That's why this milestone matters so much. Saving your first $20,000 proves something deeper than income. It proves discipline. It proves patience. It proves that you can delay short-term comfort for long-term freedom. It proves that you are becoming the kind of person who thinks beyond this weekend, beyond this month, beyond the next impulse purchase. And that identity shift may be the most valuable part of all, because wealth is not only about numbers, it's also about behavior. It's about what kind of person you become while building it. $20,000 won't make you rich overnight, but it will make you harder to shake, harder to trap, harder to pressure. It gives you room to breathe, room to think, and room to choose. And once you have that, you stop reactively living and start living intentionally. That's why $20,000 matters more than people think. Not because it's glamorous, not because it sounds impressive, but because it changes your relationship with fear. It changes your relationship with work. It changes your relationship with opportunity. And it gives your future a real foundation. So, if you're still building toward that number, keep going. Don't underestimate what you're doing. You're not only saving $20,000, you're building stability, you're building leverage, you're building peace of mind, you're building freedom, and your future self is going to thank you for every dollar you protected along the way. If this changed the way you think about savings, subscribe to the channel, and let's keep building one smart decision at a time.